On the social investing network, Tesla gets the boot. The S&P 500 ESG index boots Tesla from their list, and Elon Musk is not happy about it. We'll get into why this happened and whether Elon has a legit gripe. And eToro investment analyst Callie Cox is back with us to break down the latest between Elon and Twitter. Is the marriage between the two dead before it can even begin?
Plus, a Bored Ape dating app gets shut down. But was the whole thing just an elaborate prank? It's like you can't trust anything on the internet these days. It's Friday, May 20th. Subscribe below, hit the notification bell. Now let's get into it. Happy Friday, everyone. Our first headline of the day. Tesla just got booted from the S&P 500 ESG index. Yes, Tesla is no longer up to par with environmental, social, and governmental standards, at least not set forth by the S&P 500 ESG. So what is ESG? Environmental, social, and governance criteria are a set of standards for a company's behavior used by socially conscious investors to screen potential investments and encourage companies to act responsibly. So, the S&P 500 Jones Index cited several reasons for booting Tesla, including a decline in criteria level scores related to Tesla's lack of low carbon strategy. They also identified two separate events around claims of racial discrimination and poor working conditions at Tesla's factories, and its handling of an NHTSA investigation in multiple deaths and injuries linked to its autopilot vehicles. But Elon Musk doesn't appear too happy with this. He tweeted that the S&P global ratings have lost their integrity and environmental and social governance investing is a scam. And he pointed to Exxon being included in the top 10 ESG companies while Tesla has been excluded. I think this is really interesting, Zaid. What we're seeing right now is that people potentially co-opting this ESG movement, yes, but there is some standards there that needs to be applied. And I think that we're in the right direction, but maybe we haven't fully gone in that correct direction, Zaid.
Yeah, Delano, the ESG stuff just seems super inconsistent, you know? Like, I hate to say it, but I think Elon kind of has a point here. I mean, Tesla not being in the ESG index, but ExxonMobil is, like, he has a very valid point. Yes, the S and the G also are a component of the ESG, right? But then we have Amazon as part of ESG. Amazon has some of the biggest labor problems right now. They're constantly having labor issues. And so it's just so inconsistent right now. It just seems like marketing to me. I think the analogy that I was making earlier was that it's kind of like the Oscars. If you want to be part of this ESG index, you got to shake the right hands, kiss the right boots. Otherwise, you're not going to get in. And that's exactly what's happening with Tesla. So, yeah, I mean, I think this is a marketing, it's all a marketing scam. I wouldn't say scam, but it's all marketing to me at this point. And my trust in the ESG index is definitely shaken a little bit because of what's happening right now.
You're exactly right. I think we need to go back kind of level setting because it's really like the inconsistencies are plain and simple. It's there. I mean, we have the criteria. How do you weigh everything? How is one side going to be weighed over another? Because we know Tesla is doing great things on the environmental side potentially. But, you know, obviously they've had some issues on the social and governance side. But a lot of companies do have those issues. And are we ferrying and scaling this correctly across the board is the biggest question that I think Elon has. And I think, you know, a lot of people have that question.
Yeah, I mean, it's very, very subjective, right? Like, there's not like any actual formula or anything that we can apply to this. It's very subjective. I don't know how these companies are picked, and maybe we'll have to do another episode or segment on how and who makes these decisions. Yeah. But whoever's making these decisions is not being consistent across the board. So I wonder if this is a moment right here that'll cause a bit of a shaking out of this whole ESG movement. Maybe we'll see some more consistency and maybe new standards moving forward.
Yep, 100%.
Well, next up, we have Callie Cox to discuss the marriage between Elon Musk and Twitter. It might be over before it even started. What's holding this deal up, and what's the real reason Elon is getting cold feet? So we're going to break all this down with eToro investment analyst and author of the weekly newsletter, The Bottom Line, Callie Cox, for another round of Callie Explains It All. Yes. Callie, thanks for being on the show.
Yeah, what's up, Zaid? What's up, Delano? I mean, what a week Elon is having these days.
Yeah, it's getting even crazier.
Elon is having this week. Yeah, gosh. Yeah, so let's talk about what's happening with Elon and Twitter, because, man, I feel like every day I log on to Twitter and meta enough, you know, I see something is happening with Elon and Twitter on Twitter. So Elon said last week the deal is on hold, which is not really a thing, but we'll kind of go with it. And then he criticized Twitter's measurement of spam bots as a possible reason to maybe back out of the deal. And there was a lot of Twitter back and forth. Some of it included poop emojis. And on May 17th, Twitter filed its merger proxy saying, hey, buddy, look, we're doing this deal at 54.20, like you said, so get used to it. And there's a lot of back and forth here. I want to say that it's not super unusual. We do see a bit of back and forth, a bit of negotiation between companies and in some M&A, but the public nature of this, which is very Elon Musk, is just really unsettling. And I honestly feel bad for Twitter shareholders. So let's talk about why Elon's getting cold feet, because it seemed like a really quick reversal in attitude on his end. At the beginning, he was like, well, we're going to turn this into the public town square. We've got a lot of really good ideas on how to monetize. And now he's like, nope, can't do it. I'm backing out, which is a little tougher than he probably thinks it is. But why is Elon getting cold feet? Well, he's still taking financial risks here. We all know that he outsourced his equity, so he doesn't have a loan now that's backed by Tesla shares. So there's a little less skin on his back there, but he's still the visionary behind this company that he's on track to buy. And there's a lot of pressure to monetize Twitter, especially because he's loading Twitter up with debt now. And social media stocks, they're in a really rough spot at the moment. I mean, I have a few charts for you. I mean, take a look at Snapchat, down about 50% year to date. That's not small.
Wow.
Yeah. And then Facebook, if you want to pull that one up, down about 40% this year. Pinterest, same deal here, 40% down year to date as well. And then Twitter's down about 15%. Noticeably better than its social media peers, but the sector's in a weird space right now. Investors are really wanting to see monetization now. They're not willing to wait for future potential because the future is really uncertain. So they're looking at social media, they're seeing the monetization struggles. Twitter definitely falls into that bucket, and Elon Musk is realizing it. And I don't want to be too sympathetic for either side, but I kind of feel him. If I threw this deal out there and then a month later, the economy, markets were down another 10% and the economy was in a decisively different spot, I'd probably complain about it too. But you know what? It's kind of a double bind for him, and he doesn't. I know there's been a lot written on this, but it might be hard for him to step away. It's not just pay the breakup fee and walk.
Yeah, Kelly, you make a good point. It's not just pay the breakup fee and walk. So what happens now? It seems like people are looking at Twitter stock more as investing in Elon rather than Twitter. Like, what happens now for those people, without giving obviously advice, but what happens for those people?
Yeah, so y'all might think that this is new, but this is actually a risk that portfolio managers talk about. It's called key person risk. It's basically when an executive, most times the CEO, is kind of like the face of your brand. And that's what the whole Elon Twitter thing made me think of. I mean, Elon is certainly the face of Tesla, and he's trying to make himself the face of Twitter too. Even though he's not formally an executive yet, he's a big shareholder. So it's something to consider, especially if you're a Twitter shareholder out there. You've already experienced the ups and downs of Elon's tweets about Twitter. But you know what? We're at the point where Elon doesn't want to buy this company, but he might be shoved into the place where he's a big holder of this company and possibly an executive in this company. So that's another risk you need to take into consideration, not just for Twitter stock, but other stocks as well that have highly vocal executives.
Yeah, I think that's so interesting, the fact that Elon is like a key person risk in a company that he doesn't even own, that he's not even running. So it's just it's a whole new circumstance right there. The thought that came to my mind was, as someone who doesn't follow the mergers and acquisition space very closely, has something like this happened before? Like, is there precedence for something like this where someone makes an offer, someone agrees to buy a company, and then they want to back out immediately, or maybe back out soon afterwards? How common is this?
Yeah, well, every M&A case is a bit different, and honestly, it can be the Wild West. We have seen a few instances where the deal has kind of gone sour. Like, the two examples that come to my mind are the Dell buyout of 2012 and 2013. TLDR of that was Michael Dell said, hey, I want to take my company private. And then two big investors in Dell wanted to take Dell private as well. And then they kind of fought over that for a bit. Michael Dell ended up winning that one. And then more recently, the Tiffany and LVMH deal had a little fight between shareholders as well. So it's not it's not uncommon, but the public way that it's happening is jarring. I can't seem to think of an apples to apples comparison of this. And I'll throw out too, public spats on what to do with a company aren't super uncommon either. I mean, activist investors, Carl Icahn comes to
Yes.
mind. I mean, they can make a big stink about how a company is operating. So to me, there are examples out there that kind of look like what we're going through here, but I mean, this feels truly unique.
Yeah, the Carl Icahn example is great. And then that LVMH one, I actually did a video about that, like when it was happening back in November of 2020. And I think the result of that was they ended up, LVMH still had to acquire Tiffany, but they ended up getting like a 3% haircut on the buy price. So they didn't get a huge discount.
3% off.
3% off. And it's like, my God, like that's not a huge, that's, if Elon is banking on getting a lot, I mean, the precedent for that deal was at least only 3%. So again, I'm so fascinated to know what happens. Obviously, it's not over. I wonder if it's going to go to court or what's going to happen next. But it's definitely keeping us nerds like us, Callie, just totally totally engrossed by this stuff.
Yeah. All I gotta say is revisit your targets because it's obvious Elon doesn't think Twitter is worth $54 a share anymore. And is that what you want your future CEO to think? Probably not.
Well said, well said. Well, we can't wait to have you back on again. Thank you so much for coming on today and explaining the drama between Elon and Twitter. I'm sure we're going to be talking about this for months to come.
Thanks for having me. Happy weekend.
All right, thanks. All right, we're going to end the week with a great story here, Delano. All right, I'm going to try to keep a straight face talking about this. A Bored Ape Yacht Club dating app gets canceled before it can even launch. But were we all just part of the long con? Let me break this down. So the Lonely Ape dating app was announced in February of this year, billing itself as the first NFT-focused dating app. There's some screenshots of the app right there. It included features like Coin Digger, could be a Kanye remix, where you were going to match yourself with a higher net worth individual. And then recently, they announced that the app was canceled because too many bros were on the app. How did we not see this coming? Now, of course, the internet at the time thought this was a horrible idea from the jump. Check out some of these tweets of people reacting to when this app was announced. They did it. The worst thing that they could do, they figured out how to do it. This is good, too. These are the last people I want interbreeding. And then the Simpsons meme. This is so good. But, like so many fun things, right? It apparently turned out that this was a huge, giant long con. Yeah. BuzzFeed reported that the entire project was just one big joke, and in response to the BuzzFeed inquiry about this stuff, the founder of the app said the entire project, the founder replied that there was too many bros with a winky face emoji. So, Dave, what's your reaction to that, man?
This is crazy. My reaction is, this is so crazy, so funny. When I was single as a straight man, I want to go to the apps where there are people of the opposite sex, and I just don't think that I would have found that in an app where people are just sharing an echo chamber of the same ideas. We need more inclusion in this space, and that wasn't doing it. It was funny. It's a funny way to see it, and we can laugh at it. These people are making fun of themselves. They need to, because it would have been a fail either way, Zayn, it sounds like.
Yeah, I think this is like the best kind of prank, right? Like no one lost money, no one got hurt. And we all just had a good laugh about it. And our alarm bells should have gone off when this thing was initially announced earlier this year. Like, there's no way this is real. And it wasn't real. But, it's hilarious. And I'm sure someone's going to try something similar again. And they're going to face the same issues. Unfortunately, the crypto NFT space is still mostly dominated by bros. And so if you're going to do a dating app in this industry, or predominantly NFT crypto based, they're going to have the same problem.
I like that feature, though. That, was it?
The Coin Digger? Just blatantly obvious. You know what? That might be like a feature, a premium feature on a current dating app right now. You connect your crypto wallet just to like confirm how much money you have, because you can't fake that, right? There you go. That's if Tinder you're watching, or someone that's watching, just call me, hit me up for a consulting gig.
I love it.
All right, guys, that wraps up another great show, great week. We're going to have Nicole back with us next week, so excited to have her back on. And remember, we do this every single day, Monday through Friday, so hit that subscribe button and join us here on Monday.
Peace.
Have a great weekend.
Hey y'all, thanks for watching. Make sure you tune in every day. Also hit that like, subscribe, and notification buttons. We'll see you tomorrow.